Hello, everyone. Today I have a great call from a guy from Virginia who is actually a US based person investing abroad. And he wants to buy real estate in other countries. We talk about that. And a big point we talk about, and I get to at the end of the call, and I really get into, is there's like a big shocker at the end of the call about something that I didn't even expect to happen. And instead of saying it here, I'm going to just tease you with it so you stay all the way to the end of the call. Because I think, forget about liking it, just watch the video. I hope you enjoy it. Comment, if you have a question, you can schedule a call in the description below if there's any times available. I'm a busy guy. And, I hope you enjoy the call. It's really good stuff.
Haven't done my taxes, I'm too turned up. Haven't done my taxes, I'm too turned up.
Hey, Jeffrey. Good morning.
Hey, good morning to you, James. And sorry about the black background and my name in the front. I don't have a webcam, so
That's fine.
yeah. Well, thank you for meeting up with me today.
Thanks for scheduling the call. You had some fun questions. So I know most of the people on my YouTubes and stuff, most of my stuff's about non-residents, but I like to do some of these calls too. Of course, it's very helpful because you're a U.S. citizen, right?
Yes, I live in Leesburg, Virginia.
Okay.
And I'm an architect, and hopefully after my IPO goes public, hopefully soon, I will become a real estate investor type, invest in multifamily apartment buildings and some, single family rentals and that type of stuff.
Okay, great. Sounds good. So so the IPO, do you work for a company or is it your own company that's going public?
No, I work for a company, for a developer out of Pennsylvania,
Cool.
doing high-speed rail, and he hired me on, not paying me salary, but he gave me shares for the last 10 years, so it kind of accumulated. So I've done all of his infrastructure designs and that kind of stuff, and also a bunch of other marketing materials and profiles, portfolios, because he landed a lot of contracts, letter of intent to be contracted out for construction work all over the world.
Okay, great.
Yeah, it's exciting. It's big and exciting. So, but I'm ready for that thing to happen, man. My goodness.
10 years, a long time to work for shares.
Yes, it is.
You're a very patient man. Good for you. That's a good.
Not really.
Kind of.
But you're right. You're right. I haven't freaked out yet. But my goodness, it's wearing thin.
It's on the horizon, though. You said they're doing it. They're working with a brokerage or whatever, and they're put it together. Cool. That's great. Good for you. I hope it goes out really well. So. Sure. So you're going to have your 7-figure buyout. That sounds awesome. More or less a sellout, and long-term capital gains for you. That's also awesome.
Yes. Mm-hmm.
So let's see. You want to do stuff offshore? Tell me a little bit more. Ask me some questions. Let's see. I want to do it in your order.
Yes. My wife is Panamanian, and she's a U.S. citizen. So
mine too. Very cool.
Oh, really? Nice.
Yeah.
Is she as stubborn and strong as mine?
This is a YouTube call. She's amazing. She's so amazing.
Oh, nice. Hey, me too. Yeah. I yes. Oh, yeah. I love mine to death. I couldn't trade her for anything.
Super stubborn. Yeah, but super stubborn, of course.
Well, in a good way.
Yeah.
Right? In a good way.
Yeah. So you've been together a while anyway, so that's cool.
Right. So we are looking to purchase a vacation home in Panama City, specifically. Also, there's a few other opportunities for investment for multifamily around the same area. So I'm looking into invest in those. And I have always liked Cayman Islands. So I've got a beach house that I want to purchase there. I've been working with an agent for 6 or 8 months, just waiting for this money to come in so I can buy it. Yeah. But also there's some other investment opportunities around there too that I like to, tap into. And there's another country that I've got my feet in is Italy, near Rome, and I just do castles over there. That's for
Yeah,
sale. And
castles.
so, but I was going to also purchase that as a rental property as well, because it's got, I don't know, 17 rooms or something. It's already fixed. It's just beautiful.
Yeah.
So anyway, those are the three primary countries I'm interested in to own companies and rental purposes. I'm just trying to figure out how to save money on taxes. If I do this right, I don't have to pay any taxes on or little taxes in those countries. I want to do it legally. I'm not here to evade taxes or
Sure,
anything
so I
like
do
that.
you want to be smart. I get it. Those are good
Yeah.
questions. I'm going to have, I'll give you answers. They're not going to be complete because I don't know the laws in Cayman Islands or in Italy, but generally with real estate investments, they're not huge tax things until you liquidate them. They're not huge like
Right.
tax burdens. You have to definitely check the local laws. And like one example, like in Spain, the country takes 20% of your gross rental income. So like
Hmm.
there's the rules like that. Obviously you have to check locally. Panama doesn't have anything like that. I think Panama, if you could own the property in your own name and operate it that way, that would be fine in Panama. I mean, that's how I have a little property there too, and I think
Hmm.
it's in my wife's name. So, I mean,
Right.
you want to. I mean, I guess objective one is securely own the title of the property you're buying. That's like the most important thing is make sure that you're the owner. You have it all on paper the right way in that country, and it's all secure and it's in your name and it's all good. So, and then you have to check out the local laws. In terms of like foreign companies or U.S. companies, you would use a foreign company or put it in your own name. That's what I would say. Probably to limit legal liability, you put it in the name of a company. And I think it works the same in other countries where you put it in the name of a company and that company is like the legal responsible person.
Right.
In terms of the tax impact, I mean, there's different filings and stuff, but there's not going to be too much. There's going to be stuff you have to report, but you can basically elect, depending on the type of company, elect for it to be a pass-through and then just report it like a regular U.S. rental and get a credit for taxes you pay. And that's like kind of the ideal situation. These aren't huge. Usually real estate are like tax preferred types of investments
Hmm.
everywhere in the world. So there has to be some matching. Like if you have it in a company and they do depreciation different, technically you should recalculate the depreciation and do the books in the U.S. accounting when you report it on your Form 5471, which is a report of a foreign-owned, U.S. owned foreign corporation, as a Form 5471. So
Form
5471.
5471.
It's
Okay.
quite comprehensive. But if you open up a company in that country, and it's like a corporation, like it pays its own taxes. Basically, if you open a company that pays taxes itself instead of you paying taxes, it's probably a corporation
Right.
equivalent. And that's the form you would file at the end of the year. And it's not like it shouldn't be. It's like there's not that much different ways. You like since you have to secure it legally, you probably have to put it in a corporation in that country. It's just how you have to do it, and then you
Hmm.
just have to manage the filing correctly here. It shouldn't be a huge tax burden unless you're making a lot of money, in which case you have to pay your taxes. So, there's not that much. In terms of tax planning, I more recommend you set it up right to have the most secure legal possession and then review the taxes in that country. And there's not as much flexibility in terms of who's paying you from where because it's, located in the country and it's getting paid for people that rent it, pay to use it. It's like pretty straightforward in terms of investments and planning and stuff.
Okay. So um, there will be companies set up in these countries because I want to own the property under a company name.
That's a good
And
idea.
and if I have multiple investment properties, I will have an umbrella company to own those little companies that own properties as separately, like an LLC format here in U.S.
Hmm.
Should I should I form a corporation or an LLC here in America to own those companies in the foreign countries, or is that just too much?
It's actually not a bad idea to have a U.S. corporation as the laws are currently written, if you have a U.S. corporation, usually the laws are written to make it a little bit more tax favorable for a U.S. corp to own foreign companies instead of a U.S. person. The problem is, I mean, you don't. It sounds like if all this works out, you won't really need a lot of the profits from the companies, right? You can kind of leave them there and move them back to the U.S. and stuff, right? It won't be like you need this to live.
Right, right. And I mean, I may, I may live, I may live in some of these places, a few months of the year or something.
I mean, if they're in corporations, I mean, you might technically have to pay rent to live in them if you're using it for a business purpose,
right.
But that's not a big deal. I mean, it's going back to yourself. But a corporation, like, this is something that might be a good idea to do.
Mm-hmm.
It's a really complicated discussion. It's not something I get asked all the time, but
Right. It is complicated.
like if your goals are to just have, like, hold these properties forever, make them be yours, and then transfer all of them to your heirs and stuff, and like keep them forever, it'd probably be easier to put them in the name of a U.S. corp, because then if you ever want to transfer it or give it to someone or whatever, you just give your corp instead of transferring the ownership of all these different companies to different people.
There you go. No, that makes sense.
So
that makes sense.
And there's probably there could end up being some tax benefits because, like I said, it's generally more favorable. You don't need the money, so sometimes the problem is getting dividends out of the corp and paying dividends. It's a little bit more tax compliance because you have a separate corporate return.
Mm-hmm.
But yeah, it will be definitely easier to like transfer ownership of that corp to other people, generations and stuff.
Right. Okay.
That's a good way to do it. You could even do like a grantor trust or something, but I don't know the rules. A corp would probably be easier.
Right. And yeah, absolutely. Okay.
Or and then maybe have the shares of the corp be owned by a grantor trust that you own. So then you can avoid it's estate planning all at the same time, because then if you have the I don't know, that's another question, but I think that would be a good way to do it. Open separate companies for every property, put it under a U.S. corp, and that way you have this U.S. corp stock and shares. You ever want to gift it, put it in your will or whatever you do like that, then that's something you'll have much more easier to navigate and manage. Yeah, I like that.
Right. And I can actually just pay myself a distribution, a small distribution from the corp.
So if your U.S. corp owns the properties, here's how it works. If you own the company in Panama and you distribute profits to yourself, you pay tax on the dividends in the U.S. at the ordinary income rate, because it is a foreign-owned companies don't get the preferential dividend like the qualified dividends. It's just because it's not if it's a foreign-owned publicly traded company you can, but if it's a foreign-owned regular company, you can't get qualified dividend rates. So it's ordinary income. So if you own it if a corporation, your U.S. corp owns the foreign corp, then the dividends come to the U.S. corp if it's a 100% owner, tax-free. So the U.S. corp can get the dividends tax-free. You just pay taxes on the dividends you take from your U.S. corp.
Oh,
and then it would be a qualified dividend. That's why I said it's more complicated, but it would save you on taxes depending on the amounts. And like I said, even if you never distribute anything, then there wouldn't be dividends. But yeah, there's a little bit more overhead in terms of management and the filings and accounting and stuff. But you will, if the dividends are, especially on that 17-room place in Italy, if you make $40,000 a year profits on that and you want to send it to yourself, you're going to pay less taxes on the dividends.
Right. Okay. No, that's good. The main reason why I want to do all of this is because I understand money, the U.S. currency especially, the value of money by itself. Like if you put it into a bank account, it's going to drop. It's just going to drop because the inflation's going up, and so I got to park the money in something like real estate where it's appreciated every year, or
in real estate in different markets. Yeah, it's something tangible that you always have.
Right.
Like if currency completely devalues and it's worth nothing, then at least you have a castle and an island house.
Right. That's right.
I agree. I think you obviously have to diversify and invest in different things, especially if you come into this IPO wealth.
Right. It's definitely a life changer. It's enormous. I mean, I'm having a hard time wrapping my head around it, even 10 years later. And because the value of the company as projected or expected, it's so high. I'm like, Jesus, man, I gotta do something with this money. I don't want to blow
Yeah,
it.
you have like a million
No.
shares, and they come out to $20 each. You made $20 million in the IPO.
Right.
So and then
Imagine.
if you sell them all, save some, whatever you want to do. I mean, that's the value of the IPO. That's how it works.
Right. That's right. I mean, I don't mind paying taxes. It's just I'm paying too much, and
Yeah.
we're
I don't
getting
know.
taxed for everything.
Yeah, I don't know how you manage this, like the stock, and if you did a 73B election and stuff. I don't specialize in that, but hopefully you did it right. You've had the shares long enough, and when they do the IPO, you just basically sell them for long-term capital gains, which is like the most optimal tax output for a person. Like who's going to make X million dollars. Paying 20% is the optimal solution in the U.S. for sure.
Right. Right. Well, the way I set it up was I put majority of them, almost all of them, except for 15,000 shares in Virginia. I put most of them into an LLC company in Wyoming that I own. So, and I only have to pay 21% tax on
It's a corporation.
No, it's it's an LLC taxed as a C corp.
Why'd you do that?
Somebody told me to do it that way because
Who told you? Who told you to do that?
My boss. Is that a bad structure? I mean, it's in Wyoming. There's no state tax there, but the federal tax will be 21%.
So first of all, there's specific rules about investment corporations. Second of all, sure, you pay 21% corporate tax, but then to get the money out of the corporation, you pay 20% on the dividends. So you're going to pay double tax on it.
Right.
If you owned it personally, you just pay the 20% instead of 21 and then 20.
Yeah. Well, I was going to move the money around to other companies.
Yeah, but if you
from there,
it's just like that's a tax advice question, not a boss advice question. I mean, maybe he knows something I don't know, but if you there's first, the corps aren't generally good for those kind of investment vehicles, and if you owned it personally, you would just pay your 20% and be done. And now that it's in a corp, you pay 21%, and then when you take the money out of the corp, you pay another 20%. Well, 15 to 20%. So it's you put yourself double tax. So see if you can take them out while they're worthless. Take them out now. I just saved you 20% on I just saved $500,000. So yeah, or get like a second opinion. Talk to another if this is really going to happen. Don't just take my word for it. Call 3 other CPAs and see if it's a good idea.
Mm-hmm.
It's worth the calls, and they're going to probably agree with me. And what I would say, if you want to really save some taxes, move to Florida first. So you don't have to pay your 10% in Virginia too. So move to Florida, and then you're paying just the 20% long-term capital gains plus 3%. You save like 23% plus the net investment income tax up to some point. But then the money's clean and it's yours. Right now you pay 21% corporate tax, but it's the corporation's money. It's not your money, and you have to distribute it. You can't keep $1 million in a corporation for no reason. So you would you'd have double tax issues there for sure. So definitely.
Well, okay. If I move the money to other companies, am I still going to be double taxed that way?
What do you mean move it to other companies?
Well, I have other companies. I got 3 different companies. One's real estate, one's business investments, and another is finance type investment like trust.
I just don't see that there's no benefit to having like that. You're creating a lot more stuff to do and like hurdles to jump through when you could just own it personally. And you still have time because it's not public yet. So it's still kind of worthless more or less. You can still liquidate the company, put it back in your name without any issues. The problem is that I don't know if they're going to have, are the shares like issued in the name of the company?
Yes.
So the problem might be that you have a holding period thing, because if you issue them back to yourself, you have to wait a year to sell them to get the long-term capital gains rates. So this is something to definitely investigate right away. You definitely should talk to a tax person, not just the boss. Talk to some tax people about this, because it's not what you have, how you have it set up. Doesn't seem like the best way, especially because so let's say this deal takes another year to close, then and they raise the corporate tax rates, then you're paying 60% tax. You know, I mean, they also could get rid of the capital gains tax rates on the personal side, but you know, you can always put it back into a corp. But right now, as everything stands, I don't think anything's going to change. Anything's going to get done. Congress is froze. And I also think that, you know, you don't want to, like, I would own it personally, especially if it's long term. So definitely look into that. I mean, I can look further into it, or you can hire someone else to do it too.
Right. Okay. Yeah. Let me look into it and ask them questions.
Making me anxious about this here and there.
No. It is complicated. It is complicated. I'm just trying to save taxes.
You're overcomplicating. It's going to cause more taxes and more problems. Just own it in your own name, pay your 23%, and you're done. That's perfect.
Right. Well, damn. All right. So I got an issue.
Now, maybe tell your boss to call me, you know?
Oh, he's an idiot. So,
okay, then don't.
Yeah. No, I'm not. We get along great. He's an idiot, because he really pushed hard on that, said that it would save me taxes in the long run. But
I mean, maybe he's right. Maybe I'm missing something, but at first glance, it seems like that's not the right way to do it.
Right.
Well, not the best way to do it. It's going to cost more and be more complicated.
Yeah. Well, all right, man.
Look into that, Jeff. Yeah.
I think that's it.
Okay. Well, thanks for the call, and it was a pleasure meeting you. Best of luck with that. Definitely looking at the stock thing. It's more important than anything else we talked about.
You got it.
Okay. See you, buddy.
Thank you, sir. Bye-bye.
Okay, bye.
Jeff, you're killing me, man. So we talked about all these foreign companies and stuff, but the biggest takeaway that I have here is that before you don't take tax advice from non-tax people. And if it's a big numbers and big things you're talking about, get a second opinion. I'm not infallible. You know, this guy, I'm talking, you know, if no one's perfect, everyone makes mistakes, there's always confusion. Get a second opinion. He's talking about millions of dollars potentially of stock options coming out. If I'm sick and the doctor says I have to remove my arm, pay 20% of my body, I'm going to see another doctor first before I let him cut my arm off. So do the same thing about your money and your taxes, right? Oh man, I can't believe that came up at the end of the call. So this guy, okay, so yeah, best of luck to you, Jeff. That's awesome. I hope it works out. You know, even if you do end up paying 40% double tax on this, you still have some money, so that's still awesome. But look into that. Don't take tax advice from non-tax people. And on big issues, get a second opinion. I do that a lot for clients. They just people that have their own account. They just work with me to get a second opinion. They trust my advice, but they like their friend, whatever. I don't care. Do it. Look out for your money. No one else is going to do that. So regarding the the foreign real estate stuff, that's also very interesting. You know, you got to prioritize your stuff. You know, protecting your assets is number one. Who cares about taxes when you lose legal claim to your property? So usually a legal entity in the country is good for that. And then the difference between owning it personally or in a corp, it depends on your goals and what you're trying to do. If you're gonna sell it quickly or transfer it or do a lot of stuff, you can put it in your name. A corp is good, but it does add complexity. So, you know, there's a lot to consider. So I hope you enjoyed the call. If you have questions, schedule it below. I know in the description below, I know most of my calls here are for non-residents, but it's fun to get calls with residents too. I think about myself and put myself in these situations and see what's going on and see what I would recommend to people. And it's you know, a good question. So I hope you enjoyed the call. You know, they say that giving me a like on the video helps. I think watching the whole video to this point helps more. Share it with your friends if they're in similar situations and they don't trust their tax advisor, or they trust the wrong person, do that. And, you know, schedule a call in the description below. I think I said that. Comment if you have questions. Whatever, man. I'll see you on the next video. Thanks for your attention. I hope this was helpful, and I, you know, appreciate you supporting the channel. Have a good day. Have a nice weekend.